Ankit asked Manish what he was doing. Manish replied that he was analyzing a company's results for the third quarter. Ankit asked whether there was something special about these results. Manish said that there was nothing special and results were mostly in line with market expectations. But the company's profit had increased by 34% on a year-on-year basis. Manish further added that the interesting point is the fact that BFSI, or banking, financial services and insurance, were major contributors to this growth. This time, public sector banks have outperformed private banks. Ankit was curious to know about the issues faced by private banks, whether public sector banks had really outperformed private banks, and if that was the case, what should be one's investment strategy from here on.
In the results of the third quarter of the financial year 2023-24, several challenges are emerging for the top 5 private banks in the country. In reality, while there has been growth in the profits of private banks, the growth in net interest income, which is the NII, has slowed down. The difference between the interest earned on loans given by private banks and the payments made by customers on deposits, that is, the net interest income growth, is lower than market expectations. The slowdown in NII growth has also affected the profit growth as well.
The sluggishness in the growth of interest income will be reflected in the declining CASA ratios of banks. CASA ratio refers to the proportion of current accounts and savings account in the total deposits of the bank. Deposits obtained through CASA are cheaper for banks compared to fixed deposits or any other form. This is because banks do not pay interest on the amount kept in current accounts and pay interest at a rate of only 3 to 4% on the amount kept in savings accounts. Between May 2022 and February 2023, the RBI had increased the repo rate by a total of 2.5% in 6 increments. However, in the last 6 policy meetings, the RBI has not made any changes to these rates. Despite this, there has been a continuous increase in the deposit cost for banks because customers have shifted their deposits from savings accounts to fixed deposits at higher interest rates. So, even though the money is with the banks, the access to cheap deposits for banks has become extremely limited. A relief for private banks is that despite the high interest rates, they have seen good growth in their loan books. Banks need at least 3 to 4% higher deposit growth to match the rate of loan growth in order to lend easily. In most private banks, the deposit growth has been much lower than their loan growth. It is speculated that RBI may not reduce interest rates anytime soon. Since they are getting deposits at high rates, there is concern about the pressure on banks' net interest margins or NIMs. In the third quarter, most private banks either remained stable or faced pressures on their NIMs. And this is exactly what the market is worried about. HDFC Bank's NIM remained steady at 3.4% in the third quarter, whereas the market was expecting an improvement in it. What's surprising is that despite strong loan growth, the profit growth of private banks is slowing down. Now let's understand the reason behind this. In reality, the increasing pace of banks' loan rates naturally leads to new NPAs or non-performing assets. New NPAs are referred to as slippages in technical terms. For these doubtful loans, banks are required to make higher provisions according to RBI regulations. And higher provisioning affects the growth of banks' profit.
Private banks in Q3, they are languishing to some extent because of the fall in CASA and NIM, and their growth has seen relatively in a downward trend if you compare with the PSUs. But nevertheless, there are certain banks in which there are certain lights in the tunnels which we can see in private banks. But I think this phenomena of compressing the NIMs and CASA will be here for, let's say, 2 to 3 quarters. But after that, I think these banks will bounce back.
Q3 results of government banks are better than those of private banks. Looking at the top 5 government banks in the country, there has been a reduction in the provision for all banks. leading to an improvement in their profits. Due to a one-off loss, only State Bank of India saw a decrease in their profits. The net interest margins of all banks also remain above 3%.
PSU banks in the last 2 to 3 quarters, if you look at the numbers, quarter-on-quarter basis, they have fared quite well. Uh, you know, Totaling all together this quarter, third quarter, they have shown a growth of more than 40%. Whereas if you look at the private banks, net profit growth has been around 30 to 35%. So this shows that there are certain edge over the private banks to the PSU banks because of the provisions, because of the loan growth and the net interest growth greater than the private banks.
Now the question is, how long will this trend of increasing provisions and decreasing net interest margins in private banks continue? And can you invest in private banks instead of government banks? Let's hear from the experts.
So I think this compression of NIMS and the Kasha will be here for 2 to 3 quarters. But again, since the long-term story of India is still here to be, because India is going to be the third largest economy, and if economy will grow, these banks will provide the capital to grow. Mix of both privates and the PSUs. But at this juncture, I think your portfolio should be tilted more towards the PSU because you are getting more value in terms of price to book, in terms of return on equity. Because if you look at the biggest bank of India, that is SBI, is growing around 14% year on year, and that too in a very happy AUM, and ROE is around 19%, which is highest in the banking sector. So I think the PSU is offering you more value than to the private bank. But even in private bank, there are certain pockets where you can look at. I think SDFC Bank is offering some kind of opportunities because price to book is quite at attractive level, 2.5, and if you look at the forward, it is less than 2. So I think this bank you should look at. And the other private bank is IndusInd Bank, which is offering a good valuation.
So while the quarterly performance of government banks has been better compared to private banks, experts believe that it is still a good opportunity to invest in select private banks from a long-term perspective. As RBI will start reducing rates, all banks will see a reduction in borrowing costs and improvements in CASA. Therefore, not only private but also select government banks should be given a place in your portfolio.